Hi guys, it's Chris here. I just want to chat to you about ranges today. Um, look, a range is basically when the market is going kind of sideways. Apart from obviously the market never goes completely sideways. Just get my whiteboard up. Yeah, so a range is basically where you've got two levels, level of support and level of resistance, and then you've got two lows and then two highs which are approximately in the same horizontal plane. So when you see this, then you can tell almost when I've had these two lows here, which is the same point, I'm almost like looking out for this second high as well. But once you've had that second high, then you can consider this to be a range. And the price always tries to find its true value. So when there's no major news coming out of the market, then what it tends to do is it tends to go sideways, but it doesn't go sideways like this, obviously, because the market just doesn't do that. So what you'll find is that it will go sideways in a zigzag thing like that, just bouncing between two levels, basically. So when this happens, we call this a range. So the theory is that once you've got these two lows and these two highs, where's the logical place for it to go next? Logical, it's got 1, 2 levels of support there at that same place. So it's likely to go up until it hits this point. And at that point, it's likely to come down, and then it's likely to come up, and then it's likely to come down, and it's likely to go up. So the more bounces that it has, the stronger these levels come. Obviously, eventually it comes in, it breaks out. But while it's bouncing, we can actually take advantage of this. I mean, the market has just been moving sideways in loads of different markets. So, we focus a lot on the trending markets on the course, but we can also profit from these scenarios as well. So I'm just going to go back to the chart quickly. Okay, so I'm just going to talk about this chart here. This is the euro and the Aussie dollar. But you'll see your zigzag here is giving you a couple of highs and a couple of lows which are in the same kind of horizontal plane. So I'll get my horizontal line tool. I mean, here's the two highs I'm looking at. So first of all, I'm going to put a horizontal line tool line there. And then I'm also going to bring it down. What we want to create is we want to create a kind of a zone. If I have my line there, it's going to be too narrow really for a zone. So we also want to just consider what else are we seeing. So we zoomed out a little bit, we can see this previous support and resistance or support level here. And we could think about perhaps bringing it down to there. That would tie in nicely with this kind of wick that poked up through here. These wicks here, these bodies of these candlesticks, that could be a good sell zone. We get our square tool, we make it into a tomato shape, tomato color, sorry. So we've now got a sell zone in place. And then we look at the bottom. So we're looking at these first two lows there. I get my horizontal line tool again. Put one line there and another one. So, and I'm just getting some more confirmation as I'm looking back. Look at this high here. It's lining up perfectly with that. So that makes me a logical buy zone. Okay, so we've seen a couple of highs and a couple of lows lining up. With this particular example, you're going to find that it's a very, very narrow range on this daily chart. So just because you've got, what I mean by that is if you think about, looking for a signal, and by the time you've got a candlestick and a Bollinger signal, you enter the trade there, where my yellow line is, the stop loss is going to be kind of below these levels here. And then where's your take profit going to be? Well, right there. So you really not, you're not going to get any risk to reward ratio out of this. So that can be obviously a problem. You don't want to go for anything that's less than a 1-to-1, that's for sure, and pushing it back. So we want to get a higher risk to reward ratio out of this range. So although we've made this range from the zigzags on the daily, we've now identified these 2 points where the price is bouncing up and down. So we can actually take it down a time frame, look for signals on the 4-hourly charts. So if we go down to this 4-hourly chart, so we'll go to the, so now you can see it looks a little bit different. Yeah, so basically you can see the price is bouncing between these levels here. So it's giving us trading opportunities when you had seen these two lows. You could have perhaps tried to see a point there where you could have traded, or you know, like you do with the trending markets. Then you want to see the stochastic just pop into the oversold section and pop up. So probably at the close of that candlestick, you could have had a Bollinger Band and a stochastic could have entered the trades. So the first thing is to consider is obviously where to enter the trade, but then the next thing is where to put your stop loss. So I like to just make sure that there's a couple of different, I mean, obviously you've got that support there and also the previous support. Just see as well what is, zoom out a little bit. I could see, okay, well, here's a level as well. So maybe I just want to put you want to try and put your stop loss out of the way as much as possible. Put it just below that level perhaps. And that would be very safe. And then the next question is, where do you put your take profit? Well, you should, in theory, be able to trade right up to the sell zone. And if you're able to get that, then that would give you a 1.4, a 1 to 1.4 risk to reward ratio. If you want to be a little bit braver, you can bring stop loss a bit nearer, just the other side of there, and you're going to get nearer your 2 to 1, which we always like. But have an understanding that it's slightly more risky, obviously, because you know if it's down here, you've got that other chance of that support level being bounced on. It breaks past that one and that one and that one. So there's an example. Delete those again. Okay, so obviously when the price then goes up into the sell zone, then we can look at possible signals as well. So you might see, for example, the price coming in here. You've got this candlestick here, which is giving you quite a good signal. It's gone into your Bollinger Bands. You might have entered the trade. Entered the trade there. Now again, you have to figure out where are you going to put your stop loss. So you may have said, let me put it just above this section here. We're entering on here. We don't know yet what's to come. And you may have got stopped out. It's given us a little false break there. Again, you know, looking back in time, you can see here is the level of support. So go back in time like this and just remember that this is a big level as well. So it might have done you wise to say to yourself, right, I'm going to put my stop loss just above that area there. Then you would have actually got away with it. And then again, you can then consider trading down, right down to the buy zone. That gives you a 1.3 risk to reward ratio. If you'd have got stopped out and you put you said, okay, look, I'm going to go for a higher risk to reward ratio, and I'm going to put my stop loss nice and tight. I'm going to go for a 2 to 1 or 1.8 to 1, and you got stopped out. Don't then think that you can't trade this thing again. Because you've lost 1%, yeah? I mean, unfortunately, losing trades is part of trading. So you're going to lose some trades. So I lose trades. We all lose trades. The banks lose trades, you know. Losing trades is not a problem as long as you're only risking a 1% or you know, something that you are not worried about losing really. But then you also get other chances. So, you know, if you're in doubt, wait for the stochastic. The stochastic is hell of accurate. You can see it's popped down at that point. Yeah, that nice kind of doji had that tick in the Bollinger Band box. So yeah, I mean, at that point you can enter again. Enter that again, and then you can say, okay, well, where's the big levels of support and resistance? You've got one there, you've got one there. So that's two levels that the market will have to break up to actually, you know, hit the stop loss. So you want to put that stop loss just out of reach, and it's out of reach because there's one. In fact, there's 1, 2, 3 levels of resistance that it has to break up through before actually getting to the stop loss. So the stop loss is kind of put out of reach, like, and then you take profit, come down, and you know, you also just consider these areas of support and resistance. You want to have the best chance of being successful. So you could perhaps have your take profit lined up with there. You know, it should in theory get to at least there. If you're a little bit braver, then just put it right to the next level there. You almost do a 2 to 1. And yeah, I mean, you'd have seen it almost came down to hit your take profit. Don't worry about that. Okay, retrace a bit. Okay, you're going to be, you know, sometimes the set and forget thing really works. You know, otherwise you're going to see this zigzag form up here, and then you're going to exit the trade here. Meanwhile, it actually went down to what you thought. Okay, and then obviously we can continue to do the same things. So guys, I hope that's been of some assistance, but ranges are really fairly simple to trade. Remember, trading is just a game. It's a game where you've got 3 levels. I say this over and again, but you have 3 levels. You've got an entry point, and then you've got a stop loss, and then you've got to take profit. So the game is, even though this one is further away than that one, I think it's going to get there before it gets there, based on support and resistance, based on trend lines, based on all the stuff that we teach you, signals, etc., etc. And you know, again, the other analogy I always give is, you know, the golfer Gary Player says, the more I practice, the luckier I get. And it's the same with trading, guys. The more you do this, the more you say, I think it's going to get to my blue line before it gets to my red line. The more times you try that, and the more experience you get, the better your results will become. So even if you know, have a string of losses, keep on trading, you will get there, guys, promise you. Okay, if you need any help, pop onto the chat room or email me or give me a call. And yeah, we're here to help.